What if one financial mistake was quietly keeping millions of people from building real wealth?
It doesn't matter if you're 25, 45, or 65. It doesn't matter whether you make $50,000 a year or $200,000. The mistake is simple. As your income goes up, your lifestyle goes up with it. You earn more. You spend more. You upgrade everything.
And somehow, years later, you still feel like you don't have enough money.
This is called lifestyle inflation. Imagine you start your career making $50,000 a year.
You live in a modest apartment, drive an older car, cook at home, and watch your spending. Then you get a raise. Now you're making $60,000. Instead of saving the extra money, you upgrade your lifestyle.
You get a nicer apartment, a newer car, eat out more often, and add more subscriptions.
A few years later, you're making $100,000. But your expenses have grown too. The nicer apartment feels normal. The newer car feels normal. The expensive restaurants feel normal. And suddenly, $100,000 doesn't feel like enough. That's the lifestyle inflation trap. The dangerous part is that it doesn't feel like a mistake. It feels like you're rewarding yourself for working harder. There's nothing wrong with enjoying your money. The problem is when every raise immediately becomes more spending. Because higher income doesn't automatically create wealth. The gap between what you earn and what you spend is what gives you money to save and invest.
Another reason lifestyle inflation happens is social media.
You constantly see expensive cars, luxury vacations, designer clothes, and you start comparing your life to other people's highlights. And suddenly, what you already have doesn't feel good enough. But looking wealthy isn't the same as being wealthy. Real wealth can look boring. It's money in your savings account. It's investments growing quietly.
It's debt you've already paid off. It's having enough money to handle an emergency without panic.
So how do you avoid lifestyle inflation? First, don't immediately increase your spending when your income increases.
Give yourself time. If you receive a raise, keep your lifestyle the same for a few months and let the extra money go towards savings or investments. Second, give every raise a purpose. You can save part of it, invest part of it, pay down debt, and still use some of it to enjoy your life. You don't have to save everything. You just need to avoid spending everything. Third, don't upgrade everything at once. You don't need a new car, a bigger apartment, expensive vacations, and a new phone just because your income increased.
Choose what actually matters to you. And before making a major purchase, ask yourself one simple question.
If my income hadn't increased, would I still buy this? If the answer is no, think twice. Because being able to afford something doesn't mean you have to buy it. Imagine two people receive the same raise.
One increases their spending. The other keeps their lifestyle mostly the same and invests the difference.
At first, the difference may seem small, but over 10 or 20 years, because investments have the potential to compound over time. That's how a higher income can actually turn into wealth.
So the next time you receive a raise, bonus, or better paying job, don't immediately ask, what can I buy now?
Ask yourself, how much of this new income can I keep? That question can change your financial future.
Because every dollar you save and invest today can help create more choices tomorrow. The goal isn't to look rich. The goal is to become financially free.
Spend intentionally. Save consistently. Invest for the long term. And keep building your financial future. If you enjoyed this video, make sure to like the video, subscribe to the channel, and turn on notifications for more business, economics, investing, and personal finance content.
Thanks for watching. Keep learning, keep investing.